Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for April 24th, 2010. Okay, I'm going to start with the SPY 5-year weekly view. Let me zoom in a bit. Now, I mentioned last week that we have a potential reversal candlestick, shooting star doji type of candles. Now, one of the ongoing problems with this market is every time it does show some kind of reversal or potential reversal candles, there was never any follow through. Okay, we never get any close underneath this candlestick, and that was a confirmation. And so as a result, we never got that confirmation, and basically just kind of brushed it off as any type of reversal potential. And that's why it's so important to always wait for that confirmation in terms of trading. You never want to jump in too early because it could always be a false signal. Now, looking at the stochastic, the weekly stochastic is once again overbought, or it's approaching overbought, and as well as MACD divergence. And I know we've been seeing a lot of these for quite some time, but one of these days it will matter. Even going into a daily view, you can see stochastic and MACD is still showing divergence. So we have some daily and weekly confirmation that's telling us that this market is getting a bit stretched out towards the upside once again. But with all that said, the market does want to continue higher. This week was rather choppy. We pretty much was forming some kind of triangle, and on Friday we had this nice breakout outside of this triangle. So what that tells me is that this market wants to move higher probably next week. Either A, it will just continue higher, or slightly pull back a bit to retest the breakout area and jump back on to continue higher. So both of those scenarios are possible next week. The main thing you always want to do, and I've said this before in my prior videos, is just always look at price action. As a trader, we tend to always like to trade both sides, both the up and the downside. And when something like whatever happened on Friday, it kind of tips us off that, oh, maybe something more bearish is coming. And then in our minds, we start to prepare and look for bearish trades, or start calling tops and stuff. But I said just kind of let the dust settle a bit, let the market kind of work out the kinks, work out the emotions to see where it wants to go. And as a result, we pretty much went sideways, and it launched us into a new high on Friday. So the main thing you always want to do is just follow the price action. I know these indicators are telling us overbought, but I don't put too much faith in these indicators anymore, because when the market is this strong, these indicators really are pretty much useless. Okay, next we go into the VIX. Same thing, showing some bullish divergence. The market made a new high, but the VIX didn't make a new low. Actually, it's just starting to side trend, or basically side trended. So again, to add on to what we've already know already, is that yes, the VIX is showing bullish divergence, but so what, right? So what? The market just wants to continue higher. Now, I'm not saying to disregard these indicators, the VIX or the stochastic or whatever other indicators you use. But just keep that in the back of your mind to know that, okay, even though the market is going higher, we are hitting that last stretch. It feels like the market is in a pretty much last stretch of this entire rally right here. So eventually it will have to hit a top. And all you can really do is just basically lighten up on your positions, either scale out of whatever profitable positions you have, or just go in lightly if you still want to go into this market.